The financial system is used to bring countries down. Don't pay your debts to those in control and you'll see what happens. The assets will be taken away faster than you know what hit you. And it's happening today. You came here for the truth, so let me unveil that for you. Today we're going to get into Venezuela and so much more. Let's begin with this chart here. Recently I covered the issue with Venezuela. They defaulted on their debt. They couldn't pay. They owed money, they couldn't pay back. And that started to send a little signal throughout the financial system that there will be failures. They're not all going to get bailed out on day one. There will be hard times. And you're seeing that with the inflation they're experiencing. You can see that happening right now. Widest credit default swap spreads after Venezuela include Lebanon, Ukraine, and Egypt. There are many countries here. Always remember that there's somebody next in line. The dominoes will fall, as I like to say. After Venezuela was declared in default by credit rating companies this week, emerging market money managers are looking to identify countries that might run into trouble down the road. And I assure you, that down the road is always quicker than what they think. None are nearly badly off as Venezuela, where a combination of low oil prices, economic mismanagement, and U.S. sanctions did the country in. 5-year credit default swap spreads there stand at almost 17,000 basis points. And the nearest one is 600, of course. So you're seeing, obviously, Venezuela being, in this instance, far worse than the other countries. But that doesn't mean that the other countries aren't doing terribly. And it doesn't mean that these countries have to get to that same level. It just means that Venezuela is doing extremely bad. And that goes without saying. Now, there's more talking here about Lebanon, about others. But what I would like to say is that there's always a ripple effect. So if Venezuela fails, who are the countries that own Venezuela's debt? Who are the businesses? And which businesses will be the ones hurt most? That's how you can then factor in for investment purposes and just to see the geopolitical events that occur. It's a wake-up call for a lot of people who will say, look, the stuff I own is actually very risky. And that's the belief that you can have safety, you can have insurance and all this business. But look at what happened during the financial crisis. A lot of people thought that they had AAA rated investments, that they had insurance to protect themselves, and they couldn't pay out. Now, switching gears. Year over year Canada new house prices and year over year China new house prices. You can see it's starting to decline. Now, what's happening here? Well, what I would say for Canada, for example, is that there is major stagnation that is occurring. But if you look at different housing prices, we'll take Toronto, we'll take Vancouver, things could, in fact, pick up. I mean, if they're not going to increase interest rates, it wouldn't surprise me to see housing prices continue to go up even further. It's as soon as those real estate prices, as soon as those interest rates start to make a difference, because of course at this level it's quite small, that's when you'll see the downturn. Now with China, you're seeing the prices coming down, but we're talking about from astronomical levels. So what's going to happen there is that the government will provide more stimulus, and that stimulus could keep it from really crashing at any particular level of significance. Now, does this mean that you're not seeing particular areas in either of these countries that are doing extremely well? Well, of course. Certain areas are doing extremely well. You're seeing that Places will be sold out on day one when they open, and that's just the way it is. So there are two sides to this. I think that it has unfortunately become overpriced, and the reason I say that, the reason I believe that this is a bubble, is that the average person can't afford it. That's how I know. If the average person can't afford it in something as simple as the house that you live in, then you know there's a big problem. Many people will say, well, just get a smaller place. Live in a condo. Or rent if you have to. So, smaller place, if you're getting it in an area where perhaps if you work downtown and you want to commute less than an hour a day, they're smaller places, what you call small, are still very expensive. And then you look at condos. 2-bedroom condo in the city in a good place will often cost you, in Canada as an example, I happen to know, it would be anywhere between $600,000 and $800,000 for a 2-bedroom. That's not normal. That's not affordable. It's and just to mention rents, of course, they have become astronomical as well. They're, I guess, more affordable than buying for some people, but that doesn't factor in the fact that it's a very large percentage of a person's paycheck. The gap between the real disposable income and the cost of living. And to maintain, essentially what we're looking at here, to maintain the same amount, or your same lifestyle, it costs more and more. That's inflation, basically. But that's not factored into the equation somehow when you look at the numbers. It's extremely expensive to live these days. That's the way I see it. No matter how you want to look at it. To put it into numbers, there's a current shortfall of $18,000 between the standard of living and the real disposable income. In other words, no matter how much people are borrowing, their standard of living is in decline. It's pretty extreme to see this type of talk and knowing that it's true. I don't know what people are going to do. So that's why I wanted to cover this information here. Most families, even those approaching retirement, have little or no retirement savings. It's consistently becoming more and more of a problem. You'll see this going on over time, yet apparently consumer sentiment is always rising. It doesn't matter what year it is, it seems like it's always rising. You'll never be able to retire. And many people say that they don't want to retire. That's fine. There may be a time, in fact, though, where you would like to. You'd like to settle down and relax. And maybe that won't be for 5 or 10 or 20 years. Whatever it is, at some point, you may need a little nest egg to survive off of. And unfortunately, for the majority of people, they don't have anything. And as time goes on, things become more expensive. So what you had saved, depending on the way you save it, may mean that you have next to nothing left. And that connects in with this. Projected population age 65 and over by race of the United States. And you're seeing a dramatic increase of people over the age of 65. And they are obviously either wanting to retire or already in retirement. So you're looking at the Social Security, you're looking at the different medical care programs that are out there, and they are being heavily burdened by those 65 years and over. This is a big problem because you have, even if there are no financial crisis or anything else, this here presents itself as being the worst financial crisis ever. They can't pay it back. There's no way they'll be ever able to pay back all of these unfunded liabilities that amount to, anyone's best guess, $80 to $200 trillion of unfunded liabilities. they don't have that money. They don't have anywhere near that money, and it just gets worse. So as these people who are consistently utilizing that, those different programs that are available, it's just putting a heavier and heavier strain on the government and on the people who are working today. I see this all as being a perfect storm, a crisis that will unfortunately be worse than what we saw in 2007. And the clock is ticking. If you found this video informative, please give me a thumbs up. That really supports me very much. Comment below, subscribe to the channel if you haven't already. If you found the video informative, then I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books. Links are in the description below. Take care.